Let's get some instant reaction. Joining us now is Susquehanna analyst Mehdi Hosseini. Mehdi, want to get your response to what we just heard there, especially since last quarter, I believe, you said that this would probably be the bottom for Western Digital.
Yes. I think what you're saying is the old economy is doing relatively better. Is the new economy, the cloud infrastructure, that is sluggish. Western Digital has exposure to both NAND flash that is used by consumer electronics, smartphones, and notebook. And that's the part of the business is showing sign of life after a year of going through a nuclear winter. The question mark is on the cloud infrastructure. There's a lot of hype around AI, but we really don't know how AI would impact storage and particularly hard disk drive. This is something that was expressed by Seagate when they reported last week. So all in all, quarterly earnings seem to try to form a bottom, particularly as NAND fundamentals improve, but there's still a question mark as to what happens to hard disk drive.
And I realize that we'll probably get some more color where that question mark is concerned from the call, but what's your sense going into it right now about cloud and what we're seeing more broadly in the sector around that weakness? Is it macroeconomic uncertainty, or is this a situation where maybe Western Digital is losing market share?
Neither. I think it has to do with the cloud service providers finalizing their CapEx budget looking into 2024 and how AI is going to impact those budgets. I think those CapEx budgets are going to trend higher, but we don't know how much higher and how the mix of the budget is going to be distributed between the traditional servers and AI. And AI in particular could have some adverse impact on hard disk drive, but we have to figure that out. And that's the part of the business that depends on how Amazon's and Facebook and Google and the like are going to finalize their budgets looking into next year.
Mehdi, it also looks like the loss per share guidance for Q1 came in light at a loss of $1.95 per share versus $1.40 expected. And does that play into this issue where traditional servers are more likely to use hard disk drives than what the cloud providers are spending money on, the accelerators on NVIDIA? I would have thought that maybe Flash would have made up for that, though. It seems like you need fast storage to do that. So why isn't Western Digital, why aren't the likes of them getting the benefit to more than balance out on that side?
So we were in a nuclear winter in flash and memory in general for the past year or so, and what memory manufacturers have done is cut back on utilization rate. They have cut back on 30% of their production, so utilization rate is 70%. That has an adverse impact on margin profile. Looking forward, as NAND prices improve, we expect those losses to be minimized. As to what happens, how AI is going to impact a hard disk drive, I think it's going to take a couple more quarters to figure that out. But what you see reflected in the gross margin is primarily due to defensive action, cutting back on production to get some pricing power back. And I think by December quarter, Western Digital, Micron, and others are going to have pricing power because they're cutting back on production.
Okay. Mehdi Hosseini, thanks for joining us.